All right, everybody, welcome in. Happy 2022. Who thought we'd ever be saying that? Wow, exciting times. And we are ready to be the most disciplined version of ourselves ever. Everybody started their new food plans or exercise plans. My exercise plan was supposed to start this morning, but it was too cold. And they said we might get snow. So I didn't start anything. Plus, I had a Little Debbie's cake for breakfast this morning. So, dang it, starting 2022, just like I ended 2021. Darn it, darn Nag Nations. Anyway, well, at least we're happy, right? We're happy. So, hope you all are doing well. Let's check out the old market. The NASDAQ is up. I think this must be because of Elon Musk and Tesla, right? Then they do good numbers. They're like, oh my God, what is this? They had like, what is this thing? Spotlight. This over corner focus. Spotlight. No, we don't want the spotlight. We want the end. There. So I think they sold like 308,000 cars in their last quarter. So they did really good. So NASDAQ is up, not as much as it was. And the E-minis are just kind of floundering a little bit. So as we look, we're below a lot of stuff. We're below a pivot point. We're below the VWAP. We're below the overnight low even. We're below the cash open. We're below the hourly mid-band. And we're below the 15-minute open. So the ADD, advanced decline, is negative 95. So if we were to guess, we may have some further weakness. Here's the overnight high. So we don't have a lot of stuff to catch us to the bottom. So if I were to guess on market direction this point forward, I would say we're kind of neutral to bearish for the rest of this trading session at least. So NASDAQ doing quite nicely. Let's see what our, oh, hey, I forgot. This is going to be interesting for those of you who are new to our methods. We will be drawing a big green monster today, which is kind of cool. All right, so let's do that. So here's the E-minis. So you see our big green monster that kind of predicts price. I won't say predicts, it's kind of a forecast that we use to see, identify if it's something that's fairly priced or if it's overbought or oversold. So if we were using last month's, we see that we are fairly priced and we're at the point of control and volume profile. So let's take this big green monster out. Hope I can remember how to draw on this pencil. Now, here we go. Volume profile. I'm going to go to something called my clean chart, which brings up a little thing called the monkey bars. All right, so with the monkey bars, then I got to go to my little fibby thing here. Now, if you have not reset your fibs to match mine, this will not work. So you got to, I've got a whole big thing on, you just do a search for big green monster sweet Bobby and you'll find how to draw these things. So we basically take it from the bottom and we move it up to the top. Right in there. And then we right click on this thing so we can get it just right. And click on the month of December. So in the month of December, the high was, we're looking at these high and lows right here. Make sure you're on the month of December. The high is 47.99, 47.9975. 47.99, 47.99.75, I believe. So that's right, 4799.75. And the low is 4492. Boy, I almost nailed it. Almost. There you go, Bob. There you go, old Bobby, old Bob. So there we go. So we got this nice little thing here. So now what do? Well, then you got to get the other little fib thing, the Fibonacci extension. Then you draw it from the 50% line to the middle of this little green thingy right here. Over here, this is volume profile. Over here, this is market profile. So we're using market profile. So, and when I say middle, I don't mean middle this way. I mean middle up and down. So I'm going to start here, anywhere on that 50% line, and I'm going to draw it right to the middle, and that right there. Yeah. And then I'm going to go up to the zero line. I say the zero line. And there. There we go. So now what do? That's a good question. Now you right click on this little puppy to do, and you activate it, and you pull this up to the 200. Oh, hey, stop, Bob. You messed up. I said I got to move this up to the 200, right? Activate. Here we go. Activate. So we're going to take that up to the 200, the 0 to the 200. Right there. Then we take this 100 and we take it to right at the beginning of that little kind of reddish line where we started there. If you're saying, what in the name of God are you doing? I understand it looks a little voodoo-y like. That's why I call it. Oh, that's the thing, you know, Bobby draws voodoo charts. That's the name of it. So then we'll right click on this little puppy and we'll remove it. And then we got this nice little thing here. And we'll right click, we'll edit it. And I call these, I name them so I know what they are. This is December for January. So I'm using December actual price action to forecast levels in January. And then we change the colors to green. Why green? We like the color of cash, even though we don't see it much nowadays because we all use debit cards and credit cards. All right, so now we got a big green monster. All right, so then we go back to our volume profile. And it looks something like, ta-da! So now we are fairly priced. This is a fair price zone. My little drawing tools in here. By the way, a lot of people, I really appreciate everybody that's liking the YouTube channel. I mean, it's really growing. And I've been surprised by it. If we keep getting people liking the YouTube channel like it is, I'm going to start combing my hair and not sitting in underwear and a cheap white t-shirt that I sleep in every night. So we're going to have to step up my game a little bit. Okay, so here, this is a fair value zone. Everybody see this? Fair value. So this is fairly priced. Price is at the point of control on volume profile. And where do we anticipate price to go? Well, probably within this little zone here is where it's going to be, you know, for the next few days. This is a period or an area where price would be oversold. This is a period where price would be overbought. And then we see another fair value zone to the bottom. And the more you stay with us, the more you'll kind of learn all of these zones and how we kind of predict price. But as of right now, the E-minis are fairly priced. Don't let anyone tell you, oh, Bob, at this level, we're really, you know, we go on a kind of a shorter term basis. This is going out for 10 days, our little look period. And this, you'll notice, you'll find out that these levels, for example, this will be a level of support. Now, you may not see it on this chart, but you'll see it for the end of the month, I promise you. You will see that this level will be an area of resistance. And it's just amazing how this chart works. All right, so let's delete that. Why don't we draw another one? All right, let's draw another one in the other thing that we look at, and that is the NQ. So let's go to NQ, NASDAQ, and let's draw another big green monster. Because you're probably sitting there going, boy, it's a lot of waste of resources to draw this thing. Wait, just wait, you see it, just wait. Okay, clean chart. So clean chart. So you see, we've already got the chart for last month, but this is now old news, baby. Let's remove it and let's draw another one. All right, let's go slow. We start out with our Fibonacci retracement. Isn't that the retracement? Yep, we start with the retracement. And you're not doing it on this side, you're doing it on this side. Remember, to the left side, volume profile, right side, market profile. Volume profile is the volume, the amount of volume of shares that have traded. Let's say shares when we're actually talking about a future, but you understand what I'm saying. The number of contracts that have traded at a certain price. What is market profile? Market profile is the amount of time. This is time spent at price. So you see this little green bar here? For the month of December, the most time in hours, minutes, and days traded at 16,121. That's where the most time was spent, and that's what we're evaluating. So we're going to start down here, kind of draw it from the bottom, and we'll draw it to the top. Then we right click to make sure we get that perfectly situated. And make sure your cursor is on the month of December, because if you move it over here, these numbers change, right? You don't want those, you don't want November numbers, you want December numbers. So the high is 16,659.50. 16,659.50. And the low is 15,492. Shebang. Okay, but now we go get our Fibonacci extension. And what do? Well, they're almost exactly the same. We could draw it, I guess. You draw from this to this. Go up to the, I said, all right, to, let me, here we go. My extension, or my retracement, wrong thing, Bobby. No wonder you're getting the wrong thing. Get your extension. All right, here we go. So then you draw from here to here, and up to the 100. Then what do you do? It's a good question. I said it's a good question. There we go. So then what do? You take the 100 up to the 200, or the 0 up to the 200. Just activate this little puppy. Activate. Up to the 200, Bob. Darn it! I have humongous hands, and they sometimes got humongous feet too, even though I did lose that toe. All right, so now we got the 0 up to the 200. So now you take the 100 and you bring it to the very start where we drew that little extension. So let's move that up. There. Shabonka, shabonka. Hit the escape key. Now we want to delete this little puppy, because you have served your time. And now we'll go edit. We'll call this December for Jan. Hey, y'all be quiet. Daddy's in a session. You little freaks. I go back to school tomorrow. Thank you, Jesus. All right. So now we've got our little thing. And then, oh, I forgot to change the color. We love green. You can change yours anything color you want, but we call it green mustard. I said I thought I called it green. What did I do? There we go. Select color for all curves. Green. Yeah. Then we go back to volume profile, which allows us to see market profile and volume profile. Yeah. So let's see what we got here. I bet this is going to be, yep. Oh, this is a yes. I did draw that on NQ, didn't I? I'm sure. NQ, yep, there we go. NQ. So NQ is, where's my, there it is. We are fairly priced, baby. Look at that, right at the 50% mark. Here's where volume is the controlling, the point of control in volume profile. So we would expect over the next few days, we would expect some little cones to look like this, perhaps. You know, our trading to kind of look like this. Yeah, within the fair market zone value. If it comes down here, price is oversold. If it goes down further, though, it becomes overbought for the fair value zone. So we've always got zones below, we've got zones above. Above here, above this green line, over here, this is overbought. Isn't that cool? Any questions on that? It's just a very cool little thing that we use that you'll find out this is the best tool in the golf bag. You may not believe it now. Now, this is not my idea. This is a little guy by the name of Blake Young. You can search him out on Facebook as well. Got no problem sharing other good people who do good work to help all of us become better traders. All right, so we've seen that. Now, we go to our next little tool in our little bag, and that's our screwdriver. Well, what's the screwdriver, Bob? Well, this kind of tells us as well, if we think, that there's going to be a big correction, or if there's going to be a big move in the markets, this thing kind of tells us here as well. And we won't go into it a lot today, but just know this is something that we look at on a daily basis. Jason in our group put this website or this Excel spreadsheet together for us, and it's available to any of you. But what we do is we go closest to 30 days. So we assigned it for January 31st. That's 28 days out. And we're looking at the skew and the options. And we want to know how far away from the money is a 20-point SPX trade that is going for $5.20. So we see the 515, the 520 is going for about 544. This is about 44 away from the money. All right, so we kind of track this little trend over here. 44. So let's go 1 in 3, 2, 2, and the number is 44. So not much change from when we last traded on Friday. Now, wasn't that a long vacation, y'all? I'm like, geez Louise. So previously we tracked the skew in the options. And when skew gets way away, then you better believe that there's going to be a bullish move in the market to bring this back to some level of normalcy. 25 to 35 is where we generally think that the mean is. We see a reversion to the mean. Anytime the skew gets way out here, you can expect it's like shooting fish in a bucket. You better believe you're going to see an up move in the market, which takes this number down. So we're at 44 now, which is kind of the, as Matt Jollywally will say, the new norm around this 44 area. So what does this tell us anything? This tells us that on the market, on the S&P 500, we're pretty much neutral to bullish. Neutral to bullish. All right, let's close that up, save it. So it's really not a big indicator for anything today. The skew driver works best when price is at extremes. All right, where did we get that from? We got that from a little website called Stratagem Trade. J.L. Lord, his real name is Scott Rubel. And I asked Tom Shoshnoff, as Beth would say, what he thought about Scott Rubel, because Tom used to work with him on the floor of the exchanges. And he said that Scott is definitely aware of the concept. And the guy's brilliant. He's kind of like me. He rambles a lot, right? We ramble a lot. But guy's brilliant. You can sign up for his service if you'd like to for $199 a month. I don't know why you need to, because I was there for a long time, and I pretty much pulled everything out that I can get and offer it to you. The best thing of which is the skew driver. All right, so that's 2 of our clubs in the basket. So now what do we do? All right, so now we go to my little spreadsheet that I came up with based on Lucello's algorithm to see if we have any actions to take today, so that this thing will actually tell us what to do. And you see the prices are automatically updating. It's just because we have this spreadsheet tied to Thinkorswim. So when Thinkorswim's open, it gives us the prices of TQQ and our bond component TMF. And it doesn't tell us to do anything. We just did our quarterly rebalancing on Friday. Now, here we go, guys. Here we go. Remember, we talked extensively about not chasing the newest, biggest, greatest trade in 2022. We talked about not, working our plan. We've got a plan. Let's work the plan. Let's don't deviate. Let's don't trade Apple, and let's don't trade all of these rogue stocks that could kill us. Let's trade, rather than trying to find the needle in the haystack, you and I are going to trade the haystack. So rather than trade Tesla, you and I are going to trade something that Tesla is a component of, and that would be the NASDAQ. Then we're going to say, hey, baby, let's do that on steroids and do one that is 3 times leverage, such as TQQQ. Now, keep in mind, if you Google, can I hold TQQQ long term? Everybody and their mama will tell you, all the experts will tell you that you can't do it. You and I are idiots for even trying. We're not idiots. You know what we are? We are the pioneers. We are those who crossed the Atlantic Ocean to go and find uncharted territory. That's what you and I are doing. So are we taking one for the team? Yes. Are we doing a strategy that is extraordinarily risky? Yes. But with great risk comes great rewards, and that's what we're after. Now, what we've also done, though, is we've added a hedging component to the overall plan so that it's not just TQQQ and TMF. So we've added the Black Swan hedge that you'll learn more about as we go along. We've also added the VIX hedge. We've also have a component that is partial hedge, and that is the ownership of 342 shares of TMF, which is our bond component. We've got a stock component, or an ETF, and we've got a bond component. It's equities and stock, right? What is our balance at? We are at 71% stock, we're at 19% TMF, and we are at 11% cash in the account. So we just rebalance. Now, here's one thing that I'm testing. I'm not chasing something shiny, y'all, but I am back testing something. I'm doing the mother of all back tests. It appears that if you're going to do a 70-20-10 allocation, 70 TQs, 20 TMF, and 10% cash, it seems that a 70-30 TQQ, TMF, 0 cash does significantly better over the back test than having a component in cash. So I'm going to do a back test now to do one thing, and I'm not chasing. I want you to know the mad scientist sitting in his underwear in a dingy white shirt with unkempt hair is going into the basement today to do a back test. Now, why am I doing this? I'm doing it because I can't sleep. And I can't sleep because I'm thinking that there's something undiscovered that I need to find in the back test. What is that? I need to know I reread Lucello's book over the weekend. I skimmed it. I can't find that Lucello ever rebalanced. Somebody correct me if I'm wrong, that you've read Robert Lucello's book. I can't find that he ever rebalanced. So we did a rebalance at the end of the year. And I'm thinking the quarterly rebalance will still serve us well, but I want to see, do we need to rebalance, or we just let the Lucello algo run? So I want to see that. Now, you remember, I did a back test back to 2010 that basically for the first several years, I did 0 rebalancing, and then I rebalanced annually from, 2015 on. And it did really, really well. Had us in a $1 million account with about 600,000 in cash and about 350,000 or so in TQ. So I just want to see that you and I are doing the right thing. Now, I know past performance not indicative of future results, and this environment's different from that environment. And Bobby, with your back testing, your overfitting, you're doing all this as I got it. But I just want to see. I want to see how it would have performed in the past. Then I'll make my decisions on what I want to do in the future. So we're not changing any of our program. I do believe, though, that a 70-30 probably is better than a 70-20-10 split. And the other thing is, I believe that quarterly rebalancing will serve us just fine. But I want to see. I just want to see. So we're not changing the plan. We're just enhancing the plan. And I hope to have I would love to say I'm going to have the back test done today. There's probably 0 way, but it's just a long process. I'll go slowly, make sure that I do it correctly. Hey guys, Daddy's in a session. Y'all chill out a little bit. Right. So, questions about that? So let's see. Then what do we do? All right, so we go to our account. And here's another thing that I'm not going to spend so much time on this year. Remember how we go in here and we analyze our hedge every day? I'm just going to kind of trust the process more, and I don't want to spend as much money on my hedges as I did last year. So hold on a second, I'm about to whoop some ass. Y'all, Daddy has had it out. God, it's my with Abby. I'm taking your phone away. Out of here. JoJo, out. Sorry about that. All right, so they're in school tomorrow. God, please give them there soon. All right, here we go. 5 kids, y'all. What are you doing? All right, so on a 20% down move, it looks like I'm going to be at $93,000 on my hedge. So that looks really good. Let me make sure I'm hiding any simulations in there. Yeah, $93,000 on the 20% move down. So how does the entire portfolio look? Not as well, right? But it does say that we would be up 32,000 if, and this is all, theory. This is all if everything behaves as I would expect it to. So we'd be about 32,000, anywhere from 10,000, 32,000 on a 20% down move. So my hedges are really good. Now, you'll notice that my hedge was not that great on Friday. So what happened? Well, what happened is while you and I were sleeping, or I was still sleeping, at 8 o'clock this morning, let's see what time it actually feels, 8:25, I was still snozzing. I had a GTC order happen where I harvested 6 of my puts from my Black Swan hedge at 20 cents. So this bumped up my hedge. Now, once that happened, what did I do? I put another order in to harvest another 6 short puts that are part of the short puts of my Black Swan hedge. They're currently at 30. We want to close those at 20. Now, here's the thing where I kind of made a mistake last year, and I'm just thinking about it, because what I did was there were often days where you and I'd be up a couple grand in a day, and I would go, hey, let's just buy a Black Swan hedge, and I would spend some money to do that. Well, then the TQQs would go down, and I'd be like, well, yeah, it was good I did that, but did it really help me? So I'm not going to spend as much time now analyzing my hedge as I've spent in 2021. I'm just going to trust the process. And what is the process? The process is you sell them for 3, you buy back for where you can put them on for break even or for an overall credit, and then you harvest at 20. And you remember there were days that I'd go, well, I probably need to harvest this at 40 cents. I probably need to go ahead. No, I need to be better at just letting those orders work and filling in time and not pressing it so much. Because as you press that, then you notice that last year, my E-mini trades, my /ES trades, were one of the trades that were my biggest loser. So we're trying to put these trades on so that there's no cost to me in the portfolio. So I want to try to do that a little better this year, right? Because you see on profit and loss on my open, on my E-mini trades is down 2,555, Now, keep in mind, that's because a lot of those are the longs that remain after we harvested the shorts and we made a profit on the shorts. So this is P&L on the open. So it's kind of not a fair assessment of how those are doing, but still, I want to make sure that we put those on where I can do it for a break even or a slight credit so that it's not creating a draw on our portfolio. Now, what I am willing and still willing to do in the new year is to offer up to 3% of our net lick on a yearly basis to buy our VIX hedge. What is the VIX hedge? We'll tell you more about that as the year goes on as well, because we buy calls, 10 delta calls with 0.0025 times our net lick. So, it's been about $110 each time that we do that. And we expect to lose on those over the long term. But when the market does crap, when it does puke out, these things will help come to our rescue and alleviate any pain that we're going to take on our TQQ positions. Now, interestingly enough, as I tell you that we are thinking about even increasing our TMF exposure, we're down $530 on the day on that. So overall, so any lift that we're getting from our TQs is getting bumped down by the TMF today. So, is that a great strategy to even put more into TMF? Probably not. But I definitely do want to back test that. So we're down $93 on the day. Whammy. All right. Well, that's a bunch of stuff. Now, what do we do? What do we do today? Here's what we do. We have what we call the daily trade. And the daily trade, some of you can't do this. If you've got a smaller account, you can't put on a daily trade. If you have the buying power, we've got $12,000 of buying power, you can certainly do this. All right, so our delta here is 204. Our vega is a very manageable -55, and our theta is 4. Let's look at our Greeks here. 211 in delta, theta is -23, and vega -28. And you go, Bobby, that's terrible, man. That's a draw on your account when you have negative theta. I got you. But remember, our main income driver is no longer theta, it's the performance of the TQQQ. Right? That's where we're saying, did you know Walgreens is in the Qs in that code? Walgreens, did you know Dollar Tree is in the Qs? Costco is in the Qs. So not only Amazon, Tesla, Netflix, Facebook, and Google, but we've got Dollar Tree, we've got Costco, we've got Ross stores. So we've got all kinds of companies in here, and over the long term, we believe that those companies are going to outperform. Not only are they going to outperform, but we're going to say, hey, we're going to apply 3 times leverage to it. Again, there will be a lot of people who criticize the strategy, who say you're an idiot, you're a dork kid. I got it. I got it. You're not scared me at all. This is the plan. I'm sticking with the plan. I may enhance the plan. I may change allocations a little bit. I may change the frequency of rebalancing, but this is the plan. And I'm willing to say I've got a 10-year horizon. I know y'all probably think I'm 70 years old. No, I'm only 51. All right, so I got plenty of time to let this little thing rest. I don't need the money in this account for anything. Kids are covered. They got the food on the table. All right, so let's go to this account and let's do our 1-1-1 trade. Here we go. This one's fun, right? We do this every day. So we like to do this in the micro E-minis because it doesn't take a lot of buying power. And I can put one of these on per day. If you can't put on one per day, put one on per week or 2 weeks or once a month, whatever the frequency that you can do this. This is a great trade. So how do you do it, Bob? What do you do, old pally, old pal? Well, you can either go closest to 45 days or closest to 60 days. For some reason, I don't know what the reason is. I always gravitate closer to 60 days. It's just my nature. So I'm going to go to this 56 days. So if you want to rule, I would say closest to 60 days without going over. So if this said 61 days, I'd go with the 46 days. So I don't want to go over 60 days. So let's go to 56 days. All right. Then here's what we do. We do a long put vertical, and we have to do it as 2 trades in the Tastyworks account. So then we're going to make it 50 points wide. Everybody with me? So you're buying one closer to the money and you're selling one out here. Now, this is going to cost us a $15.25 credit. We want to do this so that the credit's only going to cost us $10. Well, how do you do that? Well, you take your strikes and move them down. So now it's $14.75. So we want this to go down to 14 to keep going down to, we get to that is $10. So it gets stuck, darn it. It gets stuck, keep going. It gets stuck, darn it. 50, we're at 11, we're at 10.50. We're getting close, y'all. Getting close. Go down another one. So that's 10.25. We'll go down another one. That's 10. Now, we generally have to work these up a quarter, but let's see if we can. It's okay to buy one where you've already got one. We've already got a position here, and it's okay to sell one where you've already sold one. What you don't want to do is buy one where you sold one and sell one where you bought one. So now we're going to buy one, we're going to sell one, but I'm going to move this down one more because we generally find that you got to find the one that, well, this one may fill in 9.75. Let's see if we can get it filled at 10 real quick. So we're paying $10 for that. Okay, so we're in. Now you see we've got 2 positions here and 2 positions there. Okay, now to complete the 1-1-1, we need to pay for that double. So if something costs us $10, we want to sell one that for about $20. So let's sell this one at $4,200, and we're going to collect $20. So that gives us a credit of $100 there. Okay. So overall, the credit is about $50 that we're getting for these, and we're doing this every single day, and we've done about 50 something of these, and not a single one has been a loser. That doesn't mean that you're going to do your first one. You've never done one. You put yours on, it's going to be a hell of a horrific trade.
Yeah, I had those locked up.
Interesting. All right, so let's look at what ours currently look like, okay? Let's do a little analysis here. And here's what our 111 trades look like. And it is a thing of beauty. Now, again, if it's just your first one, it's not going to look so pretty. So you got to keep in mind, this is why I built this fortress. Now, look what happens. If the market goes up, we make money. If the market goes down, we make big money. So this is a grind down hedge to our other positions. So if the S&P 500 were to start tumbling, we would anticipate that the TQs would be tumbling as well because of their heavy correlation to the S&P 500, and that this would give us a hedge to the downside. And you see the big old humongous hedge that we have. So profit and loss at expiration, we would be up if it closed here about $8,000. Isn't that great? It's just great. Now you keep going down here though, and you go, oh my gosh, Bobby, look at this though, the amount of money that you start losing. Well, yeah, but that's if the market S&P goes down to 4,000. We're at 4,800 right now. So the market had to drop 800 points right at for this thing to start losing. Okay, now that's bad, right? You start losing, you go, man, Bob, go down to 3760, you're down $24,000. I got you. But you forget, we've got something called the Black Swan hedge. The Black Swan hedge lifts this up and gives us profits to offset the losses that we have here. So we've got a great little plan, right? We've got an income trade that makes money on the upside. We've got a grind down trade, which helps us. This is a 111 trade, helps bump this up if TQQs go down. And then we've got a Black Swan hedge down here that bumps up to offset the losses that we take here. So y'all see how well thought out the plan is, right? We're not just winging it. Now we are doing, and I refer to it often. Y'all remember Smokey and the Bandit, the great Smokey and the Bandit song. We're going to do what they can't be done. So maybe they'll show us that we're fools. Maybe they'll show us that we're dumb, that we have no idea what we're doing, that we're amateurs, because traders are the biggest a-holes on the planet. So anytime you share this with a friend that's a trader, they're going to poo-poo, right? I've got former friends of mine who poo-poo on me daily, right? They're like, oh, you're an idiot, you're whatever. We've got people saying, oh, Bobby, you're going to cause everybody and their mama to blow out their accounts. I got it. Hey, this is not for everybody, baby. This is not for everybody. But it's well thought out. We've done extensive tests, back tests, and we've relied on the research of others, and we've all kind of bought into it. And if you don't buy into it, don't buy into it. Just don't. That's all I can say. You know, I don't put these little warnings on my little videos. I don't sit there and say, you know, those 1,000-word things that are written by attorneys and blah, blah, blah. I just don't do that. Here's what I would say. Don't listen or trust a single thing that I say. Don't trust a single thing that I say. God is my witness, though I am trying to help you, and we're trying to make all of ourselves a little better. Now, what do I get out of this? You pay me absolutely zero. Do I get the adoration of, you know, no, I don't get all that. Here's what I get. I get accountability. So you're saying, Bobby, why would you show us this? Because I get accountability. I show up here every day. I take 4 vacations a year. There's 4 weeks out of the year that we go to the beach, or we go to the mountains, or we go wherever. And that's what we do as a family. And I may leave y'all during those times, but I'm still trading, right? I'm still trading. I'm still into our little Discord room. I'm still sharing. So what I have and I get from you, you make me a better trader, because I have to show up and face y'all every day. I have to show up and face y'all when we're down $3,000 in a day. I have to show up when we're making stupid trades, when I've done all the dumb things. So consider me to be the worst trader on the planet. I am horrible. I do the wrong things at the wrong time, but I'm not as horrible as I used to be. All right. So with that being said, I like to put this in the other account. So I like to see if you don't have a Tasty Works account, open you up one and don't fund it, because you just need to be able to find. It's so much easier to find the strikes in Tastyworks than it is Thinkorswim. So that's why I love using Tastyworks to find the trade. Because if you do it over here, oh, it's so hard. But let's go put that same trade in here. Now, you remember on Friday, I had like 0 buying power in this account. I had like $100 buying power. Now my buying power in this account is like $7,000. What happened? Remember, we had all those micro positions that expired. And I'm going to have the same thing. Look, in 18 days, I got all of this junk that's expiring. All these great little 111 trades. Look at this. So they'll be expiring, and we'll be able to put on one more trade. So I got a feeling I'll have enough buying power to do 18 111 trades, just enough that when these come on, I can start it all over again. Y'all see what we're doing? We just keep these over and over and over and over and over. And the important thing is, most of you in your life of a trader, you have looked at each trade, and you notice I don't even look at it. All I look at is these. What's my deltas? What's my theta? What's my vega? And how much buying power am I using? I don't have to look at the individual trades. See, so many of you are focused on the trade, the individual trade. Oh my gosh, this trade's down, blah, 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 blah. No, no, no. All you got to do is worry. Once you stay with us long enough, you'll say, hey, man, you mean all I got to do is look at this, this, and this to see if I'm okay? Yeah, you don't have to look at those individual trades. Isn't that cool? So let's do this trade over here. Do the micro. Put the same trade on. All right. So where do we go, Bob? Oh, Bobby, oh, Bob. Well, we're going to go to 56 days, just like the last one. And we're going to do the 4650, 4600. 4600. And I have to keep all my strikes open, y'all, because y'all know I'm doing black swan hedges and everything. I know you say if you do 20 strikes, Bob, or so, it'd be easier to find it. So 4650. So here this one is. So we're going to buy this one. Now, you got to hold your control key down. And we're going to sell the 4600. Everybody see that? And then hold your control key down again. Sell one for $20. You can do it as one order in Thinkorswim. So let's do this one, 2050. All right, so then we're going to bump this up to about 1050 because we normally have found through trial and error, you got to move this a quarter to get filled. Ta-da! All right. Now then, oh Bobby, oh pal. Let's see. All right, so now my theta is -21, my delta is 214, my vega is this. Here's our income driver. Income driver is TQQQ, right? And we want our overall deltas to be kind of in the ballpark of that. But you will notice that our hedges kind of take our delta down just a little bit. So, you know, you want your overall deltas to approximate your TQQs. Otherwise, why have a leveraged ETF? If our deltas were 0 and you've got TQQQ, well, you might as well not hold TQQQ because you're not getting the benefit of holding these deltas, beta weighted deltas of TQQQ. So we want this to kind of approximate that. So we're close. And then we've got our hedges, of course, that give us a little bit of negative delta. All right, so then we've got to show our groups. Show groups, Bob. And we want to, yes, we want to put this in a little group. So let's see, where are we at now? We're at 50 something. That's 49th, 50, 52nd, 53rd. Maybe this is our 54th 111 trade. 54th. Let's see. All right. So right click, move to group. Darn it. I had that fixed too. I don't know why it won't show my group. So look and feel, make this large. Apply settings. All right. So right click on this and move to group, and we'll call this add group 11154. 111. Isn't that cool to have 54 of those and not have a single loser? I love that. All right, now what are we going to do, Bob? TMF. I need to put those shares somewhere. Move to group, and we have a group called the bonds. We'll put that in the bonds. Let's see if everything else is classified. Oh, please go. I'm going to figure that out. Oh, I think I know where it goes. This goes to, those are the 5 puts. Let's see what that is. Medium settle. We have 5 puts with 74 days. So well, that means we had something to fill. So that's got to go to, you won't see it off the screen, but it should say shorts only. BSH 17 shorts only. Put that in there. There. So now I've got everything classified. Try BSH shorts only. Make sure I put it in the right one. God, I can only imagine if you're coming in for the first day, like, what the hell? Shorts only. See if I put it in the right one. There it is. Yeah, see, I put it in there. So now I changed the name of this from BSH shorts only to, you know, it's BSH 17 is completed. So let's rename group BSH 17. And you can put the word complete to know that you've got all your trunches in there. BSH complete. Yes, I want to apply the changes. All right, cool. And see, you'll notice I don't spend a lot of time, you know, looking at these individual trades and going, oh, wow, that's up 50%, close it, or this is down, blah, blah, blah. You don't have to. You look at your overall groups, you look at your buying power. That's how you make your decisions. So there's nothing in here that I got to go and go, hey, that's up 105%, close it. It's not necessary to do that. I've still got juice in there, right? There's no need to close this naked component of the 111. Why? Because it's giving me positive delta of $1.56 a day. Why would I want to close it when my overall delta is -20? There's no reason to close that. So you got to start looking at this thing, not worry so much about the individual components. Look at your overall deltas. You can, I mean, it's a breeze when you start going, oh man, I can run an account by looking at the overall groups rather than looking at each one of the trades, you know, and going, oh God, Tasty Trade said this one's at 50%, close it. Yeah, not necessarily. It depends. All right. Bobby, question, please. For BSH, there is no ES puts available for $3 and 120 plus days. Should we go for shorter duration whenever $3 puts are available, or pay a higher price for 120 plus DTs? You can do both. I prefer to try to find it somewhere, right? So let's see if we can find it. So, and I know a lot of y'all are going out to 120 plus or whatever. Let's make this the new kind of rule. Okay, I want you to look at anything where you can get them at 60 days plus. Okay, so you can start looking at 60 days plus. When you're first starting out with your tranches of Black Swan hedge, yes, that's where I recommend you go, 120, 150 days if you're just starting the Black Swan hedge. But if you've got them and you've got several hedges in place, I'd say 60 days or more to do that. So let's say if you wanted to start your Black Swan hedge today, where would we go? All right, let's find the sum. So I'd start looking at 60 days, right? Over 60 days. Here's 56, so we could go to 74. Now, here's the cool thing. You got to make sure you got 50 wide increments. 100 points wide is not good enough. So we're looking at the one where you can sell for $3. Here it is. 27.50, 37.10. So if you wanted to buy a tranche of these, you'd sell 3 27.50s and you buy 4 or 5 2700s. Sell 3, buy 5. Or if you're just wanting to sell the puts, you sell these and then buy these when you can put the trade on for an overall break even or an overall credit. And I've built you a calculator. So you've got a calculator that'll do this, right? So if you sell these for 310, what's this? This is cool. What's this great little calculator I bought you, built you. All right. So if you sell those for 310 and you harvest for 20, that's our rule, right? then how much do you need to buy those longs for so that you can break even? Well, here's how you do it. Go to the data tab. Then you go to a what if analysis, and we'll do goal seek. So you're going to set sell K2. See that one? Your final P&L. Set that to 0 so that it's a break even by changing sell F2. Everybody see that? Set sell K2. This is K2 to a value of 0 by changing the price that you're going to buy your loans for, F2. You hit OK, and it'll tell you that $1.66. So let's say today, and this takes into account commissions and everything. It's kind of cool. So then you go over here and you say, okay, so I'm going to sell it for $3.10. So you put that order in to sell these for $3.10, $27.50, and then you put an order in to buy those 5. This is so cool. For $1.66. And then you change your day to GTC, good to cancel, and you confirm send that order. Isn't that cool? So now you know that you're putting that order in for an overall nothing. It's not costing you anything to do the trade. Now, would you be selling 3 today? Oh, heck no. Why? Because the market's up 0.13. When do we sell puts? Anybody? When do we sell puts on the ES to start a black swan hedge? When? How much must the market be down? We've got rules on this, right? Oh, fat, black glass wearing, 9-toed spell hat, son of a gun, Bobby is going to put it into writing one day so that we never have any questions whatsoever. Matt, did you get back to Kentucky? You safe and sound? There you go.
I did make it back.
Good. Y'all have a good trip, everything?
It was. We wanted to come back Saturday, but the weather was too bad. So.
Oh, yeah. I'm glad you got back safely. So yeah, you're right, Mitch. That's it. A down day of, and Stacy, or SJ's kind of close. Yeah, it's this down day of 0.4% or greater. 0.4% or greater. Now, why 0.4% or greater? Because that's what that dude at Travels and Trade said. Remember, the dude that flies the jet all over the place and sells houses every 3 months. That dude. So he did a back test, and that's what he did. So again, I don't have an original bone in my body. We copy everybody, right? We are copycats. So 0.4% tested well for him, so we keep it. So on a day that the market is down 0.4% or more, then you and I go in and sell 3. Only if you don't have 3 that you've already sold that you've not matched with the loan. So if you've done this before, the last time the market was down 0.3, and you've not yet bought back your loans, then chances are you don't need to sell 3 more. So you gotta, that's where you go to the Analyze tab and you say, can my account handle it? Right? We go into that analysis as to, hey, can I do that? So yeah, y'all are getting good at this, right? I mean, we've got rules, we've got permissions, we've got things that we don't deviate from. We do enhance, and enhancement's what I'm doing with the back test. I'll give you all those results once I finish. And if anybody's good at back testing, oh, I need y'all's help. Because can you imagine going back to 2010 and the TQQQ data and the TMF and just trying to do all that? And I just do it manually. I use my AIM spreadsheet and I put them in manually, the end of month prices, and oh Lord, does it take me a while. And then you got those kids in the background. Are you kidding me? How we do it? So we're going to have a great 2022. It's going to be great. And I don't want y'all to get discouraged. I don't want you to get, I don't want you to start searching for the latest, greatest trade. Oh my God, Bobby, did you hear about the 17948 trade? No, I didn't. I think we got enough. Got enough to put our hands around. We got something that's very comprehensive. So, and I wouldn't do any of this of and by itself. I wouldn't be doing just the 111 trade unless I had a black swan hedge down below it to catch me if I fail. So I want that safety net down there. There's no way I'd be doing 70% of my count in the TQs without every single one of the hedges that I have in place. You know, if I don't have these in place, there is no way that I'm doing that. And then we've got an algorithm, y'all, that's telling us what to do. It's pretty simple. It's comprehensive, but it's very, very simple. The hard part, the difficult part is staying with it. Because I know y'all just like me, you're going to chase something else. You're going to be signing up for some service. You're going to be paying somebody $300 and $500 a month. And you're going to pay somebody $3,000 to mentor you. And you don't need to do it. You just don't. You really don't. So now you know why I'm here. I'm not here for adoration. I'm not here for fans. I'm here because you keep me accountable. I cannot go off the rails. Well, I can because y'all seen me do it plenty of times. But y'all help me not to go off the rails. Y'all keep me accountable. Y'all keep me grounded. And I appreciate y'all so very, very much. I'm going to take a time out of your day to come with us today. All right. You have a great rest of your day. And I will see y'all tomorrow.